Gold bars cheapest in a month as Powell's pivot and Omicron whack global stocks 5% off peak. Gold bars in London's wholesale bullion market traded at their cheapest in a month on Thursday, dipping below $1,770 per ounce as global stock markets and commodity prices fell yet again following U.S. Federal Reserve Chair Jerome Powell's pivot towards tapering new QE faster and raising interest rates sooner in the face of the worst inflation in 3 decades. Government debt prices rose, in contrast, edging longer-term borrowing costs lower as more countries imposing travel restrictions and quarantines, with new cases of Omicron confirmed worldwide and South Africa saying it has become the dominant variant of COVID-19 locally with infections doubling in 24 hours. Since setting a 6th consecutive new record high on 8 November, the MSCI World Index has now fallen in 10 of the following 17 sessions, losing 5% from that peak. Crude oil meantime fell Thursday near $65 per barrel of U.S. benchmark WTI, the cheapest since late August and nearly $20 below late October's 7-year high. Silver prices extended the drop in gold bars to test their cheapest dollar level since end September's 14-month lows, dipping overnight through $22.20 per ounce as platinum tried but failed to recover last weekend's level, dropping back almost 2% inside 1 hour Thursday lunchtime in London. Jay Powell effectively jettisoned the Fed's previous stance, says the Financial Times about this week's testimony to Congress from the U.S. Central Bank's chairman. This sent a clear message to markets. Combating inflation is now the top priority, meaning a faster reduction of the central bank's massive bond buying program, plus leeway to raise interest rates more quickly than expected. Ahead of Friday's key U.S. jobs data for November, new claims for jobless benefits rose less than expected last week on new figures today, with continuing claims falling harder than forecast. But inflation forecasts in the bond market have now fallen to the lowest in 8 weeks, predicting 2.44% per year between now and 2031, fully 1/3 of a percentage point below mid-November's series record high and almost 4 percentage points below October's actual annual pace of CPI inflation. 5-year break-evens have also seen their steepest plunge since the COVID crash hit global financial markets in March 2020, dropping almost 0.5 percentage points inside 2 weeks. The more respected 5/5 measure of bond market forecasts now sees U.S. inflation averaging 2.18% between 2026 and 2031, near the lowest reading in a month and back below its average across the decade ending as the COVID pandemic began in New Year 2020. Prices paid by U.S. manufacturers edged back in November on the ISM's index of input costs, but held at what would be a decade record if not for 2021's earlier surge. New data from the Cash-in survey of Chinese manufacturers yesterday said that the sector shrank in November, while factory activity growth in the 19-nation Eurozone and the UK also missed forecasts to edge back further from the summer's record rate of expansion on the market PMI index. With London's FTSE All-Share trading 2.3% lower from this time last month, the UK gold price in pounds per ounce today set new 1-month lows with a dip below £1,330. Euro gold bullion bar prices held near 4-week lows beneath €1,565 as the Euro Stoxx 600 index lost 1.6% for the day, near its weakest since mid-October. The best case for gold is high but decelerating inflation, reckons analysts at Canadian brokerage TD Securities, because it may leave the U.S. central bank comfortable keeping the economy running hot for longer.